Cryptocurrency adoption by central banks. Onboarding challenges. Underlying frameworks of regulations. Ethical and societal. Let's discuss molding the future digital economy. Moderated by Gustavo Montero, DSCP UAE, with Tony Giordano, Giordano Industry, Luke Ozimski, CoinCasso, Daniele Marinelli, DT Circle, and Anna Agu, co-founder, Lex Law Office.
Hello, everybody. Thank you very much for coming to this presentation. We're going to talk about the fascinating subject of adoption of cryptocurrency by central banks, of which I believe nothing myself. But we will also talk about digital assets in general and digital currencies in particular. We have a very distinguished panel, and I would like to have them introduce themselves directly from the left. Just a couple of minutes on yourself.
Hi, I'm Thierry. I'm replacing Luke. Two reasons why. Because we won the Innovation Award yesterday and it's not up yet. Or the second thing is that I'm participating yesterday. It was not so bad. So I'm Thierry. I'm working for CoinCasso and Conslot, and very happy to be here.
Yes, please.
Morning, everyone. My name is Giovanni Sanna. I'm replacing here Daniele Marinelli, DT Circle. We develop blockchain technology for user protection privacy, and as well launching a crypto bank that will allow customers and users to have a unique IBAN account to manage fiat and cryptocurrencies.
All right.
Hello, everyone. My name is Marina. I'm a head of legal consultancy in MiBit. I'm also the member of Hong Kong Blockchain Society. We are a non-profit educational organization which helps government and industry to bring blockchain. Thank you.
Hello, my name is Anna Agu, and I'm partner and co-founder of Lex Law Office. We are an Estonian-based law firm, and we help with the legal issues for blockchain and fintech projects. We'll help them to find a suitable jurisdiction, incorporate, apply for the license, and get the legal opinions. Also, I'm a member of Blockchain Working Group, who is working with the European Commission on EU regulation. Thank you.
Thank you very much. Well, my name is Gustavo Montero. I'm an engineer by training, but I was a banker before. I had the incredible chance to open a bank in Switzerland called Standard Chartered. There was no Standard Chartered before I arrived to Switzerland. So I've been in the banking world for quite some time. Now, a prior speaker mentioned the following about this specific space. The fact that central banks are now working on digital currencies is exactly what validates cryptocurrencies. I thought it was a very interesting comment because I think that that is what's going on right now. So perhaps the first question for the panel is, why are central banks trying to adopt digital currencies? Anna, would you like to?
Of course, because of control of the monetary system. We all understand that behavior is changing. Today, the payment behavior is absolutely different that we had before, like 10 years ago. The second point is that actually what is the main reason that, for example, in Europe, there is a straight vision that they want to see less cash payments. And at the moment, there is already some drafts in the law and amendments have been done according to which cash payments will be not really allowed, or they do not want to see them actually. And of course, because of the cross-border payments and payment system, like to make it more efficient. I believe this is the main, and my colleagues can add.
Marina?
Yeah, this actually solves a lot of problems, and it depends on the country economy. So it also can help to bring the payment system to unbanking country or unbanking users, because it's way easy. You can use that your mobile phone to get access to your funds. This is also one of the reasons why central banks is looking into launching their own digital currency. Indeed, Anna is correct. I think that might be the future of cross-border transactions made more easy and sufficient, same as the transaction inside the country. It also can save a lot of costs of that. Also, one of the reasons is, like, as you know, that the cryptocurrency is mostly issued by the private companies. And when you are, as the user of the regular banking system, you're also having your funds stored in commercial banks. If, not if, it's the question of when, the central banks will launch their own digital currency, you will store your funds directly into the central bank, and the central bank will have the liability for the storing your funds. It, of course, will change the current banking system from the commercial banking perspective and the fintech companies, but this is just the next step of evolution.
Giovanni, your views on adoption from the central banks?
Yeah, I would say to get a step back, because I think this is in talks since years, but the pandemic has just accelerated the process. And if you think about central banks need to step into digital currencies, because in just last year there has been created a shift alternative way of payment. So that's pretty important for central banks to manage and control the situation. So I cannot see any we can say problem why central bank will not step into the digital currencies. And also the main issue will be which countries will adopt more cryptocurrencies or digital currencies. That's the real main issue in the future.
Right.
Yeah, I don't believe it, because I think we have already digital currency. I mean, if you look at the euro or the dollar, it's already 99% digital. I mean, the only thing we need to do is like having less cash payments. If you look at countries like Sweden or Denmark, they're already like at 99.9%. Okay, some other countries have lay back on it, but why do we need to create a new digital currency? I don't see the point. The only point I see is that, of course, they're afraid about our cryptocurrency and not understanding the crypto world, and therefore, you know, like letting behind a number of systems, fiscal systems in particular. And then, but it's just a matter of actually being able to have more brain in crypto, having more brain up crypto in the banking system, but it's not about digital currency. Digital currency already exists. I mean, like I said, a euro and a USD, I mean, they are 99% digital today. So the only thing I'm saying is that, like, it's a training. It's like the governments need to educate themselves about what we do, and in order to be able to, let's say, starting to regulate a little bit, you know, the crypto or the digital world.
Right, exactly. That's the meat of the problem. The reality is that these digital currencies already exist. We all use them in a certain way. At the same time, I guess another key issue is the issue of sovereignty for central banks and their own money and their own control of the economy. So I like from the left that you address the issue of the problems of sovereignty for central banks if cryptocurrencies come all over the place and they don't have control over them. From the left?
Yeah, that's a more difficult question, because I do believe in a kind of an international, let's say, currency, being digital or being not digital. And therefore today, I mean, we see that we are using a few currency everywhere in the world, certainly as reserve. Should be the same. I think it's a good opportunity maybe for the Bitcoin, even if I'm not completely convinced yet, but to be a kind of a standard, you know, currency that could be used by any type of countries, so not one in particular. And not on the other side, we also know that inflation and other normal economic and macroeconomic system will push, you know, difference in terms of conversion between countries. So it's quite difficult to see only one digital currency if we don't have today even, you know, one normal, let's say, currency, which is mostly already digital.
Giovanni.
I agree with that, but as well, we have to think about that the central bank, since the beginning, and the preliminary role on the fiscal and monetary policies. So the price stability, it's one of the key and the role. So if you think about like a central bank adopting cryptocurrencies, we lose that role. And that's the key point, and that's the also key part of discussion, because just imagine to adopt as a standardized on a well-developed country Bitcoin, and the fluctuation, or you cannot control money increases or prices internally. So that's a big economic internal problem.
But you see that for one central bank or for one worldwide central bank? Yesterday, Ireland, refused the proposal of the US to have like at least a minimum, taxation rate for. So we just see already that we don't think about a central bank. We think about a lot of different central banks, which means local banks.
Right. Marina, please go ahead.
Yeah, but here is the thing that each country still want to have their own currency, because this is the power of the country. Currently, the stable coins issued by the private companies are not backed by anything except the promises, or maybe there is some assets stored in the commercial banks, which is like sometimes it's not clear for the end user what is going on there. About the central bank digital currency, it's actually different from electronic money by the way how it's distributed. Because in the central bank digital currency, it's very important that it's used by the distributed ledger technology. And also there is like two types, what the central bank might do with that. If it's like the way what is China doing right now, so you have your account, which is verified that you are the citizen of China, you are particularly this citizen, and this is money which you have on your account. So here is like a total transparency, everything is traceable. The other way to do that is issue the tokens, which is just like fiat currency in a digital way. And then here is also might be the problem of the same problem with the fiat currency, how to trace the transaction. So the bank knows that like I have €100, then I gave it to Gustav, and then Gustav gave it to Anna. This is where the Gustav is lost in the system until Anna will put it back to the bank.
Anna.
Well, it's a complicated question, to be absolutely honest, for me, especially as a lawyer. But I believe that the main point that we need to mention that if we are thinking about central bank digital currencies, we need to understand that it's absolutely in the early stage. I mean, the main countries are still in the stage of research, or there is just some countries like China who already have the real product, let's name it as a product, and they are having the Bahamas and Cambodia, if I'm correct, and that's all. There is something happening also in Caribbean markets, so Caribbean Central Bank is trying to implement. There is a high interest to the central bank virtual currencies, but it's difficult to talk about the adoption and about how it will impact the sovereignty of the country. Yeah.
Yes. You want to say this? Go ahead.
Let's go back to the point, because I agree it's about security and transparency. But security and transparency is just a technological evolution. So it's normal that you have a number of countries who would leapfrog on new technology to actually come up with a new currency. Now you call it digital currency or you call it crypto, whatever. It's like the new technology is actually taking, like a leapfrog for helping these countries to actually being able to be and more transparent and more secure.
Yeah, that's true. Now let's move a bit into the cryptocurrency space. We spoke about digital currencies, which is banks, the central banks. But now in the area of digital currencies, Anna, what are the main challenges for adoption of cryptocurrencies? We will say by central banks as a general statement, but in reality for adoption of cryptocurrencies.
Yeah, as I'm working with the virtual currency service providers, those are our clients, not the government. So I see the problems that I feel the problems that they have. And the main problem is still access to the traditional banking. So if you are a virtual currency service provider, according to the Estonian regulation, you go under financial institution legal term. So absolutely the same regulation will be applicable to you. And if we're talking about the European regulation, virtual currency service providers goes under obligated entity legal term, which means that they need to do all due diligence measures absolutely the same as banks and EMIs, but still it's super difficult to open the bank accounts. And traditional banks do not want to onboard them. They say that it's high-risk industry, it's not transparent, we do not believe you, so on and so forth. And you will have thousands of questions before you will be onboarded. So this is a problem. I see this problem. And the same problem is actually with the EMIs. The regulation is in the place within 10 years, but still they are having the same problem. They are searching for the core bank account. So they are trying to open the bank account, and they do not have access to the central bank. My vision or my idea, or I hope to see it, if it will be implemented in the European regulation, to have the possibility to get access for the central bank, for the virtual currency service providers, if they are regulated, compliant, fully authorized, and similar to the other financial institutions. If this will happen, I believe this will be the biggest step forward.
Marina.
Absolutely, I agree with Anna. For example, Singapore implemented in 2020 the new Payment Act, which is add the new activity type as the dealing with the digital payment tokens. So this is, you are a financial institution, you are totally regulated as a financial institution. The all onboarding procedure of the clients of this financial institution is the same as electronic money institution in Europe. But there is also the issue with the correspondent bank accounts and segregated accounts. So yes, regulation taking the step forward to help the companies to work with the cryptocurrencies, which is accepted as a digital payment token, not all of them, to be more clear with their procedure and more transparent.
Giovanni.
Yeah, I agree as well that the key point here is the regulation, because single countries or different areas are moving on a totally different way. So in this case, we have companies that are accepting, as you mentioned before, cryptocurrencies, but others not. So the big point on the banking system side is regulated how they can open account for crypto holders, because if not the regulation, it's the similar one like KYC ML, that if you open a classic irregular account. So that's, I think, and I agree with that, it's a key point.
I don't believe it again. I mean, regulation, it took us, 100 years to regulate a little bit of banking? And you're telling me that in the next, few years, the regulator in different countries will come up with a... Of course, there is some initiative, and I agree, there is initiative, and certainly from some very well-advanced countries, Singapore, South Korea. But in the meantime, if you look at the regulation and the law system and the difficulties, and also on the other side, the new technology, I mean, in order to regulate this new technology, it will take ages. It will take ages. So I have another problem. And on top of it, I mean, here in the room, I don't think everybody wants to be regulated. That's another thing, right? So, and then there is another thing, because my problem with that is more like the volatility. What we saw last week is really actually very bad for us, because I mean it tell all the banks, be afraid, don't do too much with crypto, because look at that. If Elon says something, the markets collapse. So I mean we lose credibility by having too much volatility. And if you look at small crypto, they have a volatility which is so huge sometimes that we all are ready to invest into it, because we can make 10,000 times our investment. So regulation, yes. Advancement, yes. But how long?
Right. We only have a couple of minutes left, so I'd like you to give us your closing remarks, starting from Anna, on what is important for this audience to know about the real problems with adoption of cryptocurrencies by central banks. What are the key things? Just very short.
Okay, in my opinion, the key thing is that I believe that there is no way that we will not have the central bank virtual currency because it is already announced by the countries in European zone. We need to expect this within 2 to 4 years. And it is already in agenda by G20, so we need to wait for this, and this will be a reality that we are having. But there is a lot to do from the regulatory perspective, because again, the level of legal framework within EU or even worldwide is very different. So there is a lot to do, but there will be a future.
Very good. Marina.
I would say that the main issue currently is cybersecurity and the technology, which is still in the development stage. It's not only about the digital currency, which can or cannot launch the central banks. It's also the central banks is responsible for the whole monetary system of the country, so they cannot rely on the third-party wallets as a cryptocurrency companies sometimes doing. They should know that the services which they can provide to their people and also the cross-border transaction will not be the instrument of the money laundering or committing the fraud.
Yeah, Giovanni.
I think in next future, crypto and the digital worlds have to meet at some point. So this I'm pretty sure will be happen. But the point is that regulating the security is just the final key to make this happen.
Yeah, but on the other side, climate is on the agenda of the politics for the last 50 years. We didn't do anything about it. And you're telling me that we're going to do something about crypto where nobody knows anything about crypto or digital currency. And when I say nobody, when not a lot of people know anything about digital currencies in the government, it will take forever.
That's quite true. Well, I can tell you from my perspective, we are advisors to either individuals or companies to move from the old economy, from the gray hair economy, to the new economy. And, but we also advise countries, and we're currently advising 2 countries, which I cannot mention, obviously, for NDAs. But what I can tell you is the following. Central banks in the countries that I'm looking at are scared to death about what's coming. And they really don't know how to take it. And the main reason is that in central banks, there is almost zero knowledge about this area of work and this new industry. So it will only change when knowledge will come to central banks. Thank you very much. Thank you all for that. Thank you.
Thank you.
Keynote by Michael Turpin. With Michael Turpin, CEO, Transform Group.